What's going on, everybody? Welcome to another edition of Friday Wrap Up with yours truly, Kevin Weedmark, aka The Mortgage Mouth. Every Friday, I want to come to you so that I can make sure that we're all on the same page. So whether we're showing homes, holding open houses like we all love to do, what a great way to meet a lot of potential clients that are out there kicking tires, and the market is definitely heating up, as we all know. Talking to somebody in the supermarket, or you're dialing this weekend. Want to make sure that we know what happened in the mortgage space this past week so we can be clear on what the message is to all of our clients. So let's just dive in. Oh, and by the way, I'm sitting here in Tagana, Colombia. It's just north of Santa Marta. So as you can see, my spectacular view. Had to get away for a little bit, folks, but I am always working. So of course, if you need anything, you do not hesitate to give me a call. Got quite a few this week. So let's dive in. The Fed this week, first announcement for 2025, and they did exactly what we thought they would do in our 2025 forecast. Not a damn thing. And I also said be very particular on the verbiage that they're going to use. And that's exactly what happened. The verbiage came out, the market interpreted it a certain way, and it took Fed Chairman Powell coming out in his speech after the minutes are released to actually clarify what those statements meant, to put ease in the market that was spooked. So we saw rates increase just very quickly and then obviously come back down. The other thing we saw is rates touched their lowest point in over a month. So that's a great thing. We're all the way down to 4.543 on the Treasury, the 10-year. Last week we finished at 4.617. So we're coming down each and every week ever so slightly. Does that mean an exact rate improvement for you as a client or for your clients? Not necessarily. A lot of that is going to depend on, the loan amount, credit score, things of that nature. The other thing is we had pending home sales pull back from the historic levels we had set in November. Remember, we were at our highest levels for pending home sales November of 2024 since April of 2023. We saw that pull back about 5.5%. So as we're heading into the new year, or as the year closed out, I should say, because those were December numbers, looked like everyone just kind of took a pause, which typically happens due to the holiday, right? So it's nothing that was unexpected. It's going to be really interesting to see the pickup that I anticipate in the numbers, because as we have all experienced, there's a lot more people out there either putting their houses on the market, kicking tires, writing offers. It's getting a little bit busy, which is great for us. The other thing is PCE came out this week. All numbers were right in line with forecasts. So it just shows, once again, inflation does not want to seem to go anywhere. It's at kind of this stagnant case. It's going to be interesting to see how long it might take for the Trump administration, which they've been touting, that they're going to bring inflation down. The biggest way they're going to do that is with energy. So it's going to be interesting to see, does that take until probably Q2, Q3? That's my estimation to when we really start seeing those lower energy prices, which are going to spill over into the cost of goods and services. The other thing is Trump talked tariffs yesterday. He talked it very heavily. He talked about the currency, some of the countries tariffing them 100%. It didn't really spook the market, and I think it didn't spook the market so much because nobody believes that he's going to do 100% tariffs. Now, he talks a lot. We all know that. Some of us love him for that. Some of us hate him for that. But regardless, he's going to do something. He said February 1st was his timeline for Mexico as well as Canada. So it's going to be quite interesting to see if over the weekend he does anything and what market reaction we have coming next week. The 10-year Treasury, as I said, had already settled at 4.543, so we are coming down, which is fantastic. I think we need to get down into the 4.2, 4.3% range to really see a surge, to really support the activity that's happening in the marketplace. So let's keep an eye on that. But once again, Q1 is going to continue to be bumpy. Make sure you keep telling your clients that. Lock these valleys, ride out the peaks, because who knows what's going to kind of happen. We also, this month seems kind of quiet, although we have obviously our data of unemployment and all our inflationary data that will be coming our way. But the next big things as far as the Fed fund meetings is going to be next month in March, as well as we have that continuing resolution. So things to keep our eye on. My expectation for the week coming up is just kind of a lot of the same. Depending on these tariffs will really dictate where things go. All right, y'all, have a great weekend. I know I'm going to enjoy some sunshine. If anyone's wondering, it's about 95 degrees here, probably midday. It's absolutely stunning. That water is beautiful, so I can't wait to get in here after I go grab a workout. You need anything, a quote, flyer, whatever the case may be, you have somebody that needs a pre-approval, I'm your guy. I don't care that I'm sitting in Colombia, would love to help you out. And I got fantastic rates. All right, y'all, have a great weekend. Need anything, you give me a call. Cheers.